JSE all share up around 0.5% today. Yesterday we were down. Again, it's really, we're at the mercy of what we see coming through in the Eurozone.
No, totally. And I think this is going to be the pattern for quite some time to come, unless and until we can actually get some sort of consensus as to what's going to happen in the Eurozone particularly. It's interesting that we've started the year very positively as far as the US is concerned. We're starting, and not starting in fact, we've actually seen quite a few months worth of nice high frequency data coming out of the US. And
apart from the retail sales numbers today, which were a 7-month low.
No, okay. But if you look at employment particularly, and I think that's one of the critical factors, you know, and even housing is looking an awful lot better. So provided that keeps going, and provided we're looking at, say, 2.5% growth coming out of the US, I think we're at last seeing a proper path away from the US, whereas the Eurozone is still very convoluted.
Absolutely. When you look at how the JSE all share has performed over the last 4 years, hasn't done really very much. I was alluding to that all-time high that was hit. Do you think that at this point the local bourse is offering value?
In certain areas it's offering value. In the resource space, for example, it's offering an awful lot of value. I think a few players don't like the resource space because they're a little bit concerned about the possibility that Chinese growth, for example, is going to come off an awful lot more compared to what it was in the past few years. And I think that's understandable. But, you know, when you're looking at single-digit PEs, it's pretty good value indeed.
Court case between Absa and Nedbank with regards to Pinnacle Point. Nedbank is up 2.4% today. Absa is up almost 2% today. It seems the news not really affecting the share prices in today's session. Yeah,
look, I think obviously that's going to have to work its way through the courts. Yeah. But as far as banking shares specifically are concerned, look, you know, I think it's difficult to get awfully excited about banking shares generally, because of the fact that at this point in time, the appetite for new credit, while it might be growing a little bit at the individual level, corporates not really coming to the party in a big way, unless and until that changes materially. I don't think we're going to see a particularly great appetite for banking shares, but hopefully they will improve.
Well, what about the likes of Capitec? A bit of news out of Capitec. They are aiming to boost transaction income in the year ahead. They saw a bit of a shortfall in interest revenue. Let's just take a look to see how Capitec has been performing in today's session. But at the end of the day, we have expected, as you can see, Capitec is up 0.8%. What is your sense on this share itself?
Look, Capitec's a very, very different beast to the big four or the big five. You know, if you want to include Investec in there as the big five. It's been very much a growth stock, and for the past 2 or 3 years, a lot of people have been saying, well, you know, this kind of growth can't continue. And yet you look at this set of results and you think, well, you know, maybe it can. And you look at the kind of innovation they're talking about here. Things like, for example, doing what they did a few years ago in the UK and in Europe, replacing Maestro with MasterCard, this type of thing. It's got a better kind of degree of acceptance, I think, in many merchants' areas. Trying to get a much higher proportion of non-interest income in the overall mix. Yeah, look, it's clever, and I would be very loath to go against the trend with a company like this.
Would you buy Capitec at these levels, though? It has had a fantastic run, but it keeps continuing to surprise on the upside, not only the share price performance, but on the earnings front too.
Yeah, no, you're right. And this is one of the problems you have with a company like that. You know, it's the kind of company that you agonize over, particularly because you say, you'd like to buy this, but it looks awfully expensive. But
are you agonizing over this, Chris?
It's one that we've had a look at in the past. Yeah. We don't have it in the portfolio, admittedly, but look, it has been a fantastic performance.
I know you like Mr. Price.
Yeah.
You have it in your portfolio as well. We saw the sales growing by almost 16% in the third quarter. Comparable sales ticking up 12.5%. Opening up 17 stores, closing 3. But a company that is also going from strength to strength.
Yeah.
And also expensive from a share price perspective.
Well, exactly. And it's one that, you know, every few months we look at it and we think, well, you know, is it going to continue? But, you know, we have a good rapport with management. We talk regularly to them. And it's a case of doing our numbers and debating this whole thing. It's a really special company. And, you know, we've had it in our portfolio for quite some time now. And, you know, we do look at it very, very closely because, as you say, it's not cheap. But none of the retailers are, with a very few exceptions. Yeah. With very few exceptions. And I think it's always difficult in a company like this to try and you know, to actually get the real story, because you honestly don't believe that it can keep on growing at this kind of rate. But and yet, if you look at some of the
do we see all the divisions doing quite well, though?
Yeah, I mean, apparel doing great.
Yeah, the home division also doing quite well.
If you strip out inflation, if you strip out the kind of the comparable stores growth, it's still incredibly good. But if you compare them with their international peers, you know, the likes of Zara, for example, Topshop, H&M, this type of thing. It's very much in that type of performance.
Grindrod are also out with a trading update today. They say that they see headline earnings to be between 35 and 45% lower, and they're also in sensitive talks.
Yeah.
Who do you suspect that might be?
Well, you know, we had Remgro coming in buying a 20% slug of them a few months ago.
Yeah.
I wonder if it could be them. Yeah, I don't know. I mean, look, it doesn't surprise me that their earnings outlook is so appalling. Because you know the glut on world shipping is just so profound. So that isn't the surprise. Yeah, we have to wait back and see who this is.
Do you own Grindrod?
Nope, and it's one that we've never had any particular desire to own.
Favorite stock for 2012?
We're sticking with the resources. I think Anglo would be one of our favorite stocks. And unless and until we get really substantive evidence that the Chinese situation is changing materially, then we would stick with that. Sasol is another one that, again, we've had that for a long time. We like it, and we like the story there.